be. I think Wall Street has determined that we're heading into, and today notwithstanding, we're heading into a difficult period in the economy and in the market for a whole bunch of reasons. There's a whole bunch of headwinds.
Democrats are going to help that.
Had this well, they're not going to help it. They're not going to hurt it. That's my point. Wall Street is quite pessimistic right now, regardless.
Well, you know, I'd say one other thing about the market's response, in particular today, to these midterms is we've had a lot of people in Washington telling us that this is the most important election in the history of mankind and the fate of the republic hangs on it. I think what the market tells us today is that we hear this kind of thing every election cycle, and the market is going to move on, wake up on Wednesday and move on, you know, whichever way it goes.
You know, I got to tell you, though, today's session was absolutely remarkable in my mind because it's an extension, and it began last week, of the market being able to rally without those big growth names, without Amazon, without Apple. Remember, both of them gave guidance that you could have extrapolated to mean a bad holiday season for everyone. But Wall Street, certainly the market's not showing that. Look at Burlington Coat Factory, Dollar General, Dollar Tree. Look at the brick and mortar names. Look at McDonald's. Look at Darden, the brick and mortar restaurants. I think Wall Street knows there's something interesting going on with this market, and it's probably a good thing that it doesn't hinge on the coattails of just a half a dozen names.
It's pretty simple. What's happening with the market is consumers are buying stuff, isn't it? I mean, that's the bottom line. People feel good about the economy, about their job situation. They go out and they spend their money, and the corporations make more money, and that's what's leading to the market.
David, that should extend to.
What they're not mentioning is how much is this money fueled by debt, and what's going to happen if the Fed keeps raising interest rates. So yeah, there might be some optimism, and obviously we have some tax cuts for the middle class, but remember, those tax cuts expire in 2 years, and I do see less and less spending, especially if people keep racking up debt. At a certain point, you're not going to be able to get any more credit, and if you want to go look at the debt cycles, a lot of debt was wiped out in 2008, and that's why it was, you know, we had a recovery, and we are now accumulating more debt than we had in 2008 from the last financial crash. So it's gonna be really interesting what's gonna happen, because you can keep blowing into that bubble, but eventually it's gonna pop, and it's really in the hands of the central bankers and the Federal Reserve. But let me know what you guys think, and I will talk to you soon.